It's Friday, March 13th, and you're watching FreightWaves Now. I'm your host, Anthony Smith, and coming up, Luke Falasca is going to give us an update for the brokers. We also have Andrew Cox coming up with the DHL Supply Chain Pricing Power Index update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Friday Carrier Update presented by PowerFleet. I'm Zach Strickland, and we continue to see expanding truckload volumes in the United States. The Outbound Tender Volume Index up there around 11,300 now. We are jumping up about 0.8% every day at this point. We are starting to see a little bit of slowing in the increase in overall volumes. Obviously this is not a sustainable pace for truckload freight to move throughout the country. We are still expanding the gap between this time last year and this year in the freight volume side of things. We're about 16% higher than we were this time last year. OTVI was around 9,800, 9,884 last year at this time. So we have really entered a new space or a new era of truckload freight in the United States right now. So something to note, and we've been talking about this on various other channels and whatnot, but the custom shipments. So this is the inbound, the imports coming in from China to the United States, and we've been concerned about the impact and the lagging impact to the truckload freight volumes that's probably going to occur sometime here in the next month or so. So if you look at this curve, you're going to see imports from China to the United States plummeting just a few weeks ago as Chinese New Year impact starts to hit, but also deepened by the coronavirus impact as well. So those dropped all the way down about 48% lower year over year at their deepest trough. But if you notice here at the very end, we have seen some recovery here in the last couple of days. So imports are starting to increase, which is a good sign overall, because that means that China is starting to recover from the impacts of the disease as well. So that means they're getting healthier, or they're at least moderating the impact of the virus, and they're getting back to work, which means that at some point we will as well once we enter our little troughing out. So this is a good sign. That also means that inventories are going to get a good shot at recovering. As we're depleting, you saw the Outbound Tender Volume Index. A lot of those volumes are probably getting sucked down a lot faster than anticipated, which means they will run out of freight at some point in time. This means that there's going to be at least a recovery side to that in the warehouses starting right now. So looking at the overall picture in the United States right now, we've got the weighted rejection index map right here. If you look at some of these darker blues, everything in general is going up in terms of rejection rate. So capacity is tightening throughout the country in most markets, continuing. But you see that northeastern corridor right there with Allentown and Harrisburg really continues to be one of the strongest areas of the country. A lot of short haul volume in that area as they service a lot of DC activity into the megalopolis over there. Columbus, Cape Girardeau, Denver, Colorado. Denver going to be one of those markets that we need to watch over the next day or so as winter storms start to hit. Allentown, Pennsylvania. This market has been overachieving for a good while now. We're looking at the Outbound Tender Volume Index for, as well as the Outbound Tender Rejection Index for Allentown, both surging here as we enter the month of March. About March 1st, March 2nd, it just takes a roller coaster jump up into the high. We've had significant increases there, so definitely markets to watch for carriers. Again, a lot of short haul volume. If you look at the overall volume, it's roughly about a third of the freight that comes out of that area is short haul. So that means that it's going to be roughly 100 to 250 miles in length. Not a lot of long haul freight that's going on there. City, local, if you combine those two, local and the short haul stuff, you're going to have a lot of short haul freight that's not going to give you a lot of miles, a lot of minimums. Denver, Colorado, winter storm hitting today in the Rockies, going to drop a lot more snow. This market was destabilizing all throughout the winter, and now it takes another incredible leap up in terms of volume and tender rejection rate. So anybody traveling there needs to watch out. So that'll do it for this week's carrier updates. Thanks. Have a good weekend.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning everyone, and happy Friday the 13th to our Trixidecaphobia. I'm Luke, and we'll be taking a look at the outbound volume levels, which are still reaching all-time highs. If you notice this blue line here up in my top left corner, it is rising. We've continued to see this push here, and it looks like a lot of this might be due to the coronavirus impact, a lot of warehouses getting emptied, but at least you have the ability to take advantage of it now. So you'll see volumes increasing. There's a lot happening in different areas of the country. Some are more impacted than others, but the good news is there's a lot of opportunities for you to move freight going into the weekend. Now this green line, the tender rejections are also moving up. We haven't seen numbers here. We're approaching that 9% number. If you can see that here, we're almost at 9%. That is a really good sign. Spot market rates are increasing. So if you're moving freight, be sure to be on the alert to raise your spot market rates to your shippers to cover that premium carriers are going to ask for. Now this map here in front of us is our outbound volume volatility map. So this is a great map that you're going to use to call on to land some new business or to land more business today. So here's how you look at it. The darker the green, or excuse me, the brighter the green, the more outbound volume there is and the more volatile it is that shippers are not ready or experiencing. So they may not have the carrier base to handle that increase in freight versus the red areas are suppressing. Don't call those areas, not a lot of opportunities, and the white areas are just fairly balanced. Not a whole lot of change is happening that shippers probably can't handle. So it looks like Seattle, big things happening there. Obviously up there in Maine as well, a lot of volatility. Kind of a little bit here in the middle of the city. Jefferson City seeing a little bit of growth. The Arkansas area. Florida looks like is also seeing a lot. Normally we think of Florida as a pretty heavy backhaul market, which it still is, but there is a decent amount of volume there. So if you're looking for some places to call, I'd call Seattle, Maine, and then you might find a little bit of love down there in Florida as well as in the middle of the country. Now the market that we're going to look at today is Seattle. It's seen a massive spike in dry van outbound volume. You see this huge spike up, about a 20% increase over the last couple of days. That's that blue line. And we have this on a 1-year scale, so you'll see that this is actually the highest dry van volumes have been year over year. We haven't seen volumes like this ever. Even in the peak of 2019 summer levels, we're not even close. That we're way beyond that. Now the orange line is going to be the tender rejections out of Seattle. So you'll also see those are beginning to rise. We're not quite where we were during the December holiday spike, but we are pretty high at this point, almost the highest we've been year to date, sitting right about that 11% mark. So as that continues to rise up, you're going to need to increase your spot market rates out of Seattle. So now this next chart here is we're going to be taking a look at some of the 5 biggest lanes. So Seattle to San Francisco has the highest increase in tender rejections day over day, sitting at right about 8% on that lane, Seattle to San Francisco. You can see the big spike here in the bottom right-hand corner. That blue line really started to jump up there on the 8th. So as that continues to rise, spot market rates on the Seattle to San Francisco lane for dry vans are increasing. So increase your rates. You're going to pay it to the carriers, so make sure you get it from the shipper. Now our predictive rating tool here behind me is showing that we're sitting at about $1.75 line haul. So make sure you add your fuel surcharge in to get your all-in rate. So you're probably looking around $1,700 to $1,800 is what you're going to be paying today on that lane. And it looks like we might remain level here for the next week until we continue to push higher about a month out. So keep that in mind. Rates right now, good time to lock it in. It's only going to get more expensive as we push forward. I'm Luke. That'll do it for today's broker update, and have a fantastic weekend.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Hello and welcome to the DHL Supply Chain Pricing Power Index Update. I'm here with Andrew Cox. Andrew, it wasn't long ago we were talking about everything is a little bit flat, not a lot of movement. What's the latest now?
Tony, we've got some volatility in the index actually. So we've got the biggest 1-week jump that we've had since we started doing this back in September. So we were at 25 last week. We've actually jumped to 40. So you can see a pretty violent upswing for the pricing power towards the carriers here in the last couple of weeks. We don't think it's going to last, but the reason that this is happening is because of the American consumer. summer. We began panic buying. I was at a store last night where the workers couldn't even keep the shelves stocked. It was just seemingly a never-ending, like Sisyphus's ball up the hill. So the volumes are incredible. This is as Zach and as Zach talked about in the carrier update, we have volumes at the highest level of any time in our 3 years of our data here. We're 3% above the 2018 peak, and 2018 was a really strong freight market, especially there in the summer. So to see volumes this high is really encouraging for the carriers in the short term, but likely will violently snap back here soon.
Right, and so one of the things you mentioned that this is consumer driven, and so this newly found volume, this surge up, as you mentioned, the store that you're in, just constantly moving, a lot of activity. It's not sustainable, right?
No, it can't be. I mean, the fundamentals of the economy haven't changed. There isn't extra money in the U.S. Pockets right now. Maybe there will be with a stimulus here soon, but there's no extra money in U.S. consumers' pockets. They're spending right now to try to get ahead. They're planning out for the future, which means that likely future plans will include less goods being bought. So no, this is not sustainable.
So a pull forward effect.
Certainly, yeah. I mean, you can see this. I mean, 3% above the highest peak we had in 2018. But on the capacity side, there's two things happening. One, drivers are rejecting contracted loads. Our outbound tender rejection index is a measure of contracted loads. So they are starting to take loads in the spot market and rejecting loads in contracted. But you also have some drivers actually leaving the market. So we have some capacity tightening up because drivers are afraid of getting the coronavirus, just like anybody else. There's a lot of people working from home. Some drivers are sitting on the sidelines as well.
Gotcha. So a lot of upward pressure on prices here, especially as capacity leaves the market.
Yeah, certainly so. We, with our new truckstop.com spot rate data, we've been monitoring a lot of the markets. More than 2/3 of the markets are slightly green or even this week. We've had 7 or 8 markets that are in double digits up, where we don't have a single market double digits down. So yeah, spot rates are reacting to these changing dynamics.
Gotcha. And so, as you mentioned, a lot of volatility, a big jump in the most recent week. Does this factor into your long-term outlook?
It does. I do think this is, we've had like a pull forward almost where the peak season has been brought up a couple months. So we think that, honestly, this could fall way down to maybe the lowest that it's been. The lowest that it's been since September. I think 15 has been the lowest, but I think we'll be seeing that number here in the coming weeks.
Gotcha. And your group monitors this closely, right? The Passport group?
Correct. Yeah, we write this weekly. We also write 3 other reports per week, plus some kind of a long-term report, usually a 20 or 30 pager that comes out every 2 weeks. So yeah, there's a lot of content you get, as well as tickets to our events with the Passport research.
Excellent. Andrew, insightful as always. Thank you so much.
Welcome, sir.
And thank you so much for tuning in. That's going to do for this DHL Supply Chain Pricing Power Index update. Please stay tuned. We'll be sure to update you next week. And that's going to do it for this Friday edition of FreightWaves Now. Thank you so much for tuning in. The content does not stop here. We're always streaming around the clock on all your favorite streaming platforms, including Apple TV. So check out our FreightWaves TV app. Also, if you're looking for a little bit more insight, as Andrew just mentioned, check out our Passport team for all our latest offerings and access to all of our world-class events. Thank you so much for tuning in, and we'll see you next week.